doubles. And so we haven't seen an environment like today 40 years. And I'm going to show you the evidence of all of that in a moment. But here are the big consumer challenges: is the affordability. You take high prices, prices on real estate have skyrocketed, and then higher rates. Your interest rates are basically double what they were, more than double. I mean, you get a 30-year fixed at 3, or some of you have loans even less than 3, but from 3% rates up to 7.5, and now we're, let's say, 6.75-ish. That's a huge jump, and then add that to the prices. Properties just simply aren't affordable. So that's a big consumer challenge, is when you're talking to a buyer and they start looking at the property, and then you calculate the payments, and then they start to choke on the payment.
Little bit.
But the next big issue, and this is where the opportunity is in all of this, the affordability is going to get better because prices have peaked. There's no doubt the price have peaked, and we're seeing a lot of accepted offers where the sellers are negotiating and the prices are starting to soften. And I think we're going to continue to see that over the balance of the year. But here's what happens, what comes along with that. Obviously, as an agent, being able to have a seller that's willing to negotiate down a price is a great thing. But the offside, or the other side of that, is it starts to put fear into other buyers, because they're saying, well, maybe I should wait. Maybe I should wait. Prices, how far are they going to go down, and how long is this going to go, and how bad is it going to get, and all of that kind of stuff. So there's the psychological issue that you have to deal with. And that leads me to the point of market timing. People come from a place of fear. They want as much certainty in their life as they can have. And when it comes to buying and making your biggest investment ever of real estate, they'll look at that and go, well, heck, if prices are coming down, if we're talking about buying, let's say, a $900,000 property, and prices go down 5%, well, that's $45,000 I just saved. And how often are you going to save $45,000? I mean, that's a huge savings in people's minds, right? Where 5% in traditional real estate markets is not that big a deal from a negotiating perspective. But anyway, you have this whole market timing thing going on in people's minds. So when's the best time to buy? We know the majority of people buy in spring, which is the worst time to buy because there's the greatest demand and the highest, higher prices. And we have the evidence, the MLS will show you this, that December and January is when the demand's the lowest, when the sellers negotiate the most and prices improve the most. So we're going into August, we're going to see the demand is down significantly. Real estate sales have dropped significantly. I'm going to show you the data on that in a moment. The sales over the balance of the year are probably going to stay in the same range because of the lack of affordability. The big impact that's going to happen this year is there's 2 things. 2 Fed cuts projected. The Fed's meeting this week. They're basically going to say we're not doing anything. And the data that came out just about 10 or 15 minutes ago was the consumer confidence numbers, and that were a little better than expected. So we had a little bit of a rate improvement. That went away. So there's going to be no movement in August. But in September, we're probably going to see a 0.25% improvement in the Fed funds rate. And then later in the year, November, December, we'll see another one. So as rates drop, we're going to see affordability improve. Every 1% that the affordability improves means more buyers will be entering the market, and we'll start to see more activity in that level. But here again, and I'm going to show you this right now on how to do this, is our real estate prices coming down? That's the big question. The market timing challenge, that's the big challenge.